Okay, so welcome to India Market Review for 2nd of Jan 2015. A very happy new year to you. We got off to a rocking start, some would say, with a 111 point rally on the Nifty today, and the Nifty sleeping through the last week of 2014. So let's see what the Nifty is up to, and of course some of you would be aware of our views of last time, and it's really interesting to see uh, what might have changed or has not changed this today, on Friday. So without any further ado, let's jump in. And as far as I know, the only important things that happened was the 7.5% increase in customs on crude oil. So this was something which is, I think, the third time or the second time the government has increased customs duty on crude oil, taking advantage of the price fall. And then excise duty was increased by 2 rupees per litre today, right? So the petrol and diesel was cut yesterday or day before, and then we've not seen the benefit of that at the retail pump at all. And of course, the government is saying that this is all for the benefit of collecting money to reduce the fiscal deficit and spend it on infrastructure, etc. Blah blah blah. So if this goes along, then no further decreases in retail prices of petrol should be expected. But it'll be interesting to see if SR and Reliance Industries now start some sort of a price war with the OMCs and see if they are offering fuel at a lower price. So that's something to look at. Third, I think oil is now at a 4.5-year low at around $56 a barrel today. Okay, and Sridhar tells me that the India basket is 55. So going down, and there's now some really serious talk about oil possibly going to $30. God knows when. A couple of pointers on that. Both Russia and which is some other country have decided, not Venezuela, have actually decided to increase their oil production. And there is this whole idea that in a matter of time that Iraqi oil might come onto the market, and that's going to be a spoiler to the party. Okay, so that's one thing. Then Balki has sent us this link about HSBC manufacturing PMI for India at a 2-year high and the consumer goods in top gear. Well, this is going to be really interesting because this is a very contra view compared to what I've been hearing sort of in quotes from the street in terms of these quarterly results may not be as good as people are expecting, number one. On the other hand, the PMI index is at a 2-year high, so both being true is going to cause even more confusion than anything else. And on the, so let's put that anyhow, India PMI at 2-year high. And 5, I think there was a news article about China house prices falling the fastest ever this month, or rather in December 2014. So more stimulus, etc., to be expected from the Chinese government to see what they can do to prop up the Chinese economy. Oh yeah, the other thing, so euro is at 2010 low against the dollar, and of course the dollar has become stronger across the board. And is there anything else? I think anything else? Big macro fundamental stuff anyone knows? I think that's it. So this is it, and I think we enter quarterly results now. Infi is on 9th Jan, so we'll see how that goes. Oh, we got it. Okay. Right. Okay. And for Sridhar's financial well-being, 15th Jan is important because he's invested in VGuard, and VGuard results are on Jan 15th. Apart from that, I don't know what well-being he talks about, because he already made a hell of a lot of money on that. It's just going to add a little more, up and down. So PSU banks meeting, yeah, but I don't know what Modi and all of them are doing in Pune, enjoying the good weather, I think. So what will come out of it, and what does the government propose to do? Tell the PSU bank walas to give loans which are not sound, or to be more liberal with their disbursements or NPA classification? Then why the hell do you have RBI on the other side? So I'm not really sure what I don't think. In my limited knowledge, I don't look at banks as being drivers of economy. The economy has to drive itself. The banks are just channels for money to flow in and out. And if you're going to then tell the banks to give money out in order to sort of try and prop up the economy, what's the difference between the actual QE that US and Japan and the European banks are doing versus this sort of backdoor QE enforcing the PSU banks to do that? So if that happens actually, and the banks get pushed to give out loans, and that translates to who knows higher NPAs later, may not actually be such a great idea. So that's just my opinion. Okay, so Balki also adds that auto numbers for December are mixed. So yeah, okay, fine. And then of course the excise duty cut, right? So let me add that also. 7, the duty cut or the excise duty concessions, yeah, duty stops have been withdrawn. So all those vehicles are now expensive from today, or rather yesterday, and I think that also happens for consumer durables, etc. Yeah. So you might actually see a drop in sales with prices now rising. So we'll see what actually happens.
Actually, but like one or two interviews which I saw with management, like I think to a certain extent, like price drops in like fuel, copper, and all may offset to a certain extent.
Okay.
Yeah, because like fuel has been significant price cut in diesel.
Sure.
Copper prices have like
come
down.
Iron also.
Yeah, and consumer durables are major consumers of copper.
Okay.
Like we got Havel, many electrical.
Sure. So commodity metal prices are down, and Bobby's asking, does this affect CV sales? I don't think there was any stops on the CV sales, commercial vehicle sales. There was no excise concession as far as I know. It was basically for passenger vehicles, SUVs and sedans and hatchbacks. So that's the one which has been sort of withdrawn now. Okay, so if there is a hit, it will be on the passenger segment, not on the CV segment, right? Okay, so what Sira is saying is that the increase in vehicle sales might get compensated by things like a drop in fuel prices, etc. Yes, it's a known thing that people take into account how much money they may have to shell out on fuel, and as fuel has become cheaper, there will definitely be a set of people who will now be more encouraged to buy vehicles with cheaper fuel. And if if oil goes to $30 a barrel, then yeah, I guess you could increase the car prices even more, but people might still end up buying a lot. But then if the retail pump price for us does not come down, and the government decides to eat away all the drops to say that we are going to do this for the national health of the economy, then it's not going to trickle down. So we'll have to see how that happens. So economics is a funny subject. Just toss a coin, you can say anything and you might be right, so you'll get away with it. So on the one hand, government increasing crude oil prices, increasing excise, taking more money into its kitty, reducing fiscal deficit, overall definitely good at the national level for the overall macroeconomics of the country, and should have a stronger national balance sheet. On the other hand, the price not being the lower prices not trickling down to the public might just not have the demand push that would be good for manufacturing companies, and then the economy doesn't really get the demand side of it, while the balance sheet side of it becomes healthier. So, and then how does that pan out? I really have no clue, right? Okay, so I think these are the major events that have happened of so far, and we get into quarterly results from next week, and I think, like we've been saying for quite a few weeks now, that's probably what is going to drive the results going forward. So with that, let's jump into the charts and see what the charts are telling us and see if they're any different from what we have been saying last week. So you have the Nifty right in front of you, and that's the big Marubozu candle. And for the last 1-2 weeks, we've been saying very critical for it to decide what levels it wants to break out, either that resistance levels, and today it broke out not only 1, 2, maybe even 3, this line here, this uptrend resistance there, and then this line there, just where it has closed at 8,390. The market's closed at 8,395. So this downtrend which we've been talking about and said you have an established lower top and we're saying there's a tentative downtrend in place, you now don't have a lower bottom to confirm that downtrend. So you now have to revise this whole view and say maybe this is just a correction and then now we are going back up. Now having said that, where is that? Sorry. Yeah. I think one of the important things to look at will be volumes, and volumes at least today are pretty much back to normal. Like we've also been saying for the last 1 or 2 weeks, the less volume in the last 2 weeks is probably just because of the end of the year effect, etc. And we have an MACD crossover on the S&P on the Nifty in the positive territory, or sorry, it was in the negative territory but now going back up. So looks like the Nifty has definitely gotten back some strength and some zest in the market. So that's as far as the wider market is concerned. Let's look at the sectors, starting with the Bank Nifty. So the Bank Nifty made a new life high, and for weeks we've been saying, if there's anything to buy in Indian markets, it is definitely the banks, and that has just done well today, and we have a new life high on the Bank Nifty. So just let me move that there. Right. Okay. So banks remain strong. BSE Power. So that's now gone up and been able to break all the moving averages here. But the critical level is whether it's going to break this resistance or not. Right. So if 2160 BSE Power Index.
What power?
BSE.
Yeah.
Power Index. So if the BSE Power Index is able to break beyond 2160, then we should probably see it go higher. Given the way the markets are today, we really have to, review maybe some of our views. Balki is saying about some volume problem. Is anybody else having audio problems at your end? Just confirm quickly.
I think volume is low on chart, not volume.
Oh, okay, sorry. Yeah, so we'll look at all the volumes on the chart. Sorry, not the webinar volume. All right, got it. All right, okay. So realty index, so that's also now moved up, but it's pretty tentative. But like we've been saying, this support here was pretty critical, and once realty is above 1700, then you should see much bigger moves on the realty side. Looking at the IT, CNX IT, big move today, pretty handsome move. Lots of consolidation happened at 11,200 CNX IT in the last 2-3 days, and today it's really taken off, right? So in spite of some negative sentiments and negative views, or rather conservative views being sounded out by the companies, the IT index has done well. Then the mid cap index back to its life high there with double top. At the rate things are looking right now, likely to break out. The Nifty Junior again back to its life high. So we've been saying this for almost a month now, that definitely the mid caps are the ones which have been outperforming. And so apart from the Bank Nifty, if you had to invest, then maybe we are looking at the Nifty Junior place stocks and the mid cap stocks for ideas. Energy, this is interesting. First index that we have seen which has a higher upper shadow. So it's now going sort of sideways, and we'll have to review maybe on next week to see what the energy does. Okay, so CNX Infra, very good move, very nice Marubozu, and for the last 3-4 days you've got these green candles. So bullish trend seems to be picking up, at least as far as the patterns are concerned. Pharma, so we've been talking about pharma being a potential laggard, and we had found so many shorts and top formations in the pharma stocks. Can't say that this confirms that, just that I'm saying that with all the other sectors we've seen some pretty nice Marubozu type candles, but this one we are seeing a sort of doji. So some weakness definitely there in pharma, not participating in the rally today. And PSU banks, so this is interesting that the PSU banks are now exactly, so this is like a triple tweezers top, and very likely that it would break out, and then if that breaks out, then definitely much higher levels. But it's curious that while the bank Nifty has made new life highs and made that with a nice Marubozu type candle, the PSU bank index is not really showing that the sort of strength that the bank Nifty is showing. And then we've got BSE Auto, right? So the BSE Auto, again, downtrend line broken, going up, and MACD again crossing over, getting into the positive zone. Consumer durables again showing some strength, but the sideways consolidation is not yet complete, and we'll have to wait for a breakout of the 10,000 level, and then it might go up by about 1,500 points. What is interesting is that this downtrend line of the MACD seems to have turned back up, and possibly there's some strength now happening on the consumer durable side and could go up much further. If the companies pass off lower commodity and input costs to the consumers, consumer durables could become cheaper in the days ahead or weeks ahead. We might see a demand push because of that. Capital goods, okay, so important rally through this resistance line, and then looking like it might go back up to 16,500, maybe even 17,000. FMCG, so FMCG not really participating in today's move, a bit of a weak rally, but there's a lot of multiple resistances all bunched up in that zone, and could just do one big Marubozu, who knows, on Monday or Tuesday. Healthcare should be the same as pharma, right? So really nothing much to say. Metal index, right? So the metal stocks have been doing quite well. We spoke about the bullish divergence in metals last week, and it has really played through quite handsomely, I think, this week, with the metal index, metal stocks going up. It's gone up along this trend line, come to exactly the downtrend line, which has been on our charts for almost, I think, 2 months at least, and stopped just there and taken that resistance. On top of that, if you see here, there is the 50-day moving average, which it has just hit today and has cooled off from there. Could quite possibly now break out to higher levels and target 11,400 on the index. Everything indicators wise on the metal side is definitely looking good. Mid cap, okay, this is done. Oil and gas done. Okay, BSE, PSUs. Okay, so PSUs still in a sideways range for the last 5-6 months. Could go back up with the rest of the market, and I think, yeah, that's it. So question is, was the last few weeks a correction, and has the uptrend resumed, right? Quite a few sector indices have moved above some important resistance levels, whether they are moving averages or resistance, horizontal resistance lines or trend lines, whatever it is. However, FMCG and pharma continue to show weakness. All right. And then there's question of perhaps oil also, right? When I say oil, I'm talking about the oil marketing companies. So this is the general question right now, and I think we'll have to look at individual stocks to see, how each one is performed. So let's get into that, and we'll start with the ACC. So first thing that strikes out is the low volumes in ACC today, right? Yeah. Right, so big move on ACC, nice, very uh, pleasing candle. Anybody would love to see that. Unfortunately, the volumes behind that are very, very meager, right? So question is whether this is the pattern that we're going to see in the other stocks, that is, which is the up move has happened perhaps on very low volume. So ACC definitely looking good, and one would say that above 1425, 1440 one should be buying it. But given the low volumes, you have to think about what could be called a bull trap, right? So people being enticed to buy into the market, but the big guys not really participating, and then after that some selling happens at higher levels. Again, just to put this pattern back in perspective, the weekly chart, you can see the head and shoulder that we spoke about. So it's gone up and at a pretty critical level, 1450, 1460 could very well decide which side ACC goes, and we'll have to review that after that. Just putting the trend line here. So that's the level on the daily chart that we will track as far as the head and shoulder is concerned. Okay, so this is ACC now going up on low volumes. Would definitely not recommend buying it in spite of the nice size of the candle. Same we see in Ambuja, nice candle but very, very low volumes. So Ambuja candle wise looking good, volume wise looking very, very shaky. And then let's finish our Ultratech along with that. So very, very good volume, sorry, very good candle. And Ultratech has been a sort of I don't know, I wouldn't say exception, but not moving in line with the rest of the two stocks in the Nifty cement basket. Today's volume has picked up on Ultratech, and as I've been saying, it might have something to do with the Holcim Lafarge deal, and there's possibly some event risk that is embedded into Ultratech, and you're seeing Ultratech behave differently from ACC and Ambuja for the last several weeks. So if I had to buy, I would be buying Ultratech, but not ACC and not Ambuja. Once Ultratech crosses 28.25, then definitely higher levels to at least 3,000 should be expected. And the point to note is that today volumes have picked up on Ultratech. So let's just put that down. Let's make it a little simple. We'll just put that list, Ultratech. Okay. Coming to Asian Paints. So again, this has done well the whole of this week. Monday, nice rally. Friday, nice rally and like a flag. And again, on Asian Paints, the volumes have picked up. So at this point, we would say that this is just a correction, not a downtrend, and it broke that downtrend very decisively on Monday and went sideways like a flag, 3-day flag, and then went back up. Monday volume did not pick up, but Friday volume has picked up. I would urge all those of you who have done candlesticks to go and look at your notes and look at what's the pattern called mat hold. This is not typical of that, but this is as close as will probably come to textbook, right? So the way the last 3 days behaved and then how today behaved, right? And again, important point to note is that Asian Paints went up on higher volumes, and once it's beyond 800, then I don't know how it is valued fundamentally, but technically it would probably go to 1,000 rupees in my opinion, with some stops at every 50 rupees, 850, 900, 950, 1,000. Okay, so that's Asian Paint. Buy. Axis Bank has finally moved to 514. We've been talking about that for weeks. Unlucky for Sid, I think. Sometimes this is what happens. So 514, and again volumes have increased today for Axis Bank. So you kept saying buy banks, and this has given you 3% move in just one day. Most likely will go higher. I would say the next logical target for this is 550, right? Okay. Now, in stocks like these, in stories like this, you really don't want to look for stop losses. I think you want to keep looking at how high this could move and keep riding the trend, right? So at least in your spot market, you should probably have all the banks in a demat account. Coming to Bajaj Auto, so they talked about some poor sales, I think, and 6% decline in sales, and Bajaj Auto, very important, dancing around with the 50-day moving, 100-day exponential moving average, and just at that very critical support where it has exactly closed today. And quite possible, there is no call on Bajaj Auto in terms of buying or selling it. It needs to make up its mind. It's a buy only above 25.20, and it's a quite a sure sell below 24.35 for a target of 23.50, right? So even if I think one went and looked at last week's IMR, and this is where it was, and then it has more or less stayed not about 50 rupees or 60 rupees less than where we left it last week. And what will be critical is whether the support gets broken out or this resistance gets broken out. We will have to wait and watch. So again, I think for the whole of January IMRs and probably the first half of February IMRs, the one thing not to forget is you must have your results calendar in front of you, know when the results are, and then make sure that risk is something that you have either you're prepared for and are ready to act appropriately, or you take your positions after the news is out of the quarterly results. So Bajaj Auto very, very evenly poised. For those of you who are looking at options, you might want to look at something like buying the 2500 call and maybe buying the 2400 put, and look at 100 rupee long strangle and see if that is something that might make sense. All right. Then going alphabetically, Bank of Baroda. So that's been one of the leading PSU banks, only because it's coming back to its life high. And if there was a PSU bank I was looking at, then technically definitely it is Bank of Baroda and probably State Bank of India. Almost all the other PSU banks are well below their life highs except BOB and SBI. There might be others in the outside the Nifty space which I don't track, but I would definitely be looking at BOB in the demat account or buying it through derivatives. Basically it has to get past levels of around 1120, and once it's beyond that, then 1150, 1200 are very, very reasonable targets. Bharti, so big move on Bharti midweek and on 1st of Jan rather yesterday, but again really no volumes. Or let me look at volumes in BOB. I forgot. 1 second. Yeah, so volumes in BOB did go up. MACD has crossed, looking quite healthy. Bharti, low volumes persist into the new year, though you do have an MACD crossover and you have a breakout of a downtrend line and you have a nice Marubozu candle yesterday, but this is something that is to be careful about, because it could go up another 10, 15, 20 rupees and then move down. One event risk in Bharti and all the telecom stocks is the 3G spectrum and 4G spectrum auction, which is coming up I think again in Feb. The good news apparently is that the reserve price might be much lower than it was in I think 2010. So that's the good news. But apart from that, really nothing else. And one should not rule out the competition that these companies are going to face once Reliance Jio is launched anytime in the next few months. So again, nice Marubozu candle. However, absolutely no convincing volumes behind it, right? So okay, let's see how many such stocks are there, and then we'll look at maybe strategies collectively for them later. BHEL, so capital good index has broken out, and BHEL deciding, I think, from the 250 levels to now clearly go up. Slight increase in volumes, but really not much to be convinced about. And that's the level that we want to track into the future. And once it's beyond 290, then much higher levels could be expected. This whole week has been green for BHEL, very nice candle. But even if I went to the weekly chart, the volume picture on the weekly chart is still pretty low. So 16.7 million versus the average of 21.7 million. So the question is, are these rallies maybe opportunities to lighten your portfolio, or are they rallies to actually get in and put in fresh money? I think the vote is still out, and we'll need to look at more stocks to perhaps give us a clearer picture. Okay, so BHEL otherwise would be a buy if you're doing pure candlesticks without volume. Like I said, lots of green candles this week, a lot of Marubozu types, and the next target will be 290. Question is what happens after that. BPCL, okay, so now BPCL is doing 3 weeks of pivoting at around 650, and this is interesting because there's this news article which said that diesel and petrol are supposed to come down by about 3.5 rupees odd, but there's a 2 rupee excise absorption that the government has done, so all these companies should be making a 1 rupee per liter profit, which is very, very good. But having said that, with this sideways move and this red candle today, a little surprising as to why that is not showing up on the chart. But like we say, the charts do what they do. And as a matter of fact, a small uptick in volumes on today's red candle, MACD very firmly in the negative zone. This is probably going to consolidate, and we'll have to decide which side to break out. On the top end you have the 50-day moving average at around 675, and at the lower end you have at 600 the 200-day moving average. Which one does it break out? Sort of not really parked in the middle, but almost there between these two. You could look at things like the 650 long straddle along with the 600 and 700 short strangle to see if that is something that actually very perfectly put. It's at 644, at 650 it's nicely just right in the middle of the 700-600 strangle spread, and one could actually do that for the rest of the month. So just to repeat, 650 long straddle and the 700-600 short strangle is something that you could look at implementing, and either way, whichever way it moves, you could end up making money, right? Okay, so that's the view on BPCL. Earlier, if you remember, we've been saying, you should be buying oil and oil marketing companies simply because as the crude oil input costs come down, and hopefully the company's margins, even if they're the same, but fuel consumption goes up, these companies should make more profit. Now, the situation right now, based on whatever the newspaper is saying, is that they now are actually making a nice 1 liter plus 1 rupee per liter plus profit. But why has the stock not reacted to that? As a matter of fact, it has given a red candle today and has really done nothing for 1, 2, 3, 4th week now. Okay, this is interesting. 4th week now that it is at 650, and in the 4 weeks that have gone, oil has actually gone down more. So something, with the factors out there in the chart not fitting in, there's probably something cooking out there. We'll have to just wait and watch. Cane. So cane is a proxy for crude oil in India. Basically, remember that they just drill oil out of Rajasthan and sell it at internationally indexed prices. But interesting that it is actually showing some strength today. But again, for the nth time in today's session, very, 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 very low volumes. 8.8 lakhs, but the average is 1.6, half the volume. So this up move is not happening with actual buying. As a matter of fact, this now is looking like a bull trap. It's not a short covering. As it goes up, maybe it goes to 250, then that might be a really good time to short gain once it's at 250. Okay. Let's just look at ONGC while we are at it, because they're basically in the same boat as far as raw crude oil producers are concerned. So ONGC also showing strength in terms of candles, but not showing strength in terms of volume, right? And both of them showing strength in terms of MACD crossovers, but then that could also come down. So no question of buying these stocks with fresh money. As a matter of fact, it's a question of looking at perhaps higher levels to go short on ONGC and Kane. Okay. So that's Kane India. And then coming to Cipla. So this is the big head and shoulder top of 1, 2, 3, 4 months in Cipla. Has actually not broken the neckline, strictly speaking, but again the volumes are just not there, and it is just at the zero level, the MACD line. Nothing in the indicators or in the charts to help us decide what we want to do. We'll actually look, you should not look at buying Cipla till it breaks beyond 670, 675. It could go up there and again come down, and I would reiterate that at this point abundant caution on pharma stocks. And when you have massive patterns like this over 4 months is really the focus or the key thing that going forward. Don't lose perspective of time. So Cipla is a big question mark, could be a short, and definitely not a buy till it crosses 670, 675. Okay. And just to reiterate, once it breaks the neckline, if it does, of course now there's sort of double support there, but once it's below 615, 610, then definitely it's a question of shorting it, and below 600 it could easily fall to 560, 550. Coal India, so again gone up but long upper shadow today, and no volumes, or the volumes are really low into. So apart from I think Ultratech, BOB, Access, which were like all clear strong buys. Others, yeah, Asian Paints, right? All the others so far, if they have gone up on clearly and distinctly low volumes. Actually, it's not a pattern you see very often on index stocks of such big up moves happening on such low volumes. So again, the same question: are we looking at a potential bull trap in the making? DLF. So what do we have? Not much of a move, just there at 137 plus minus, too weak to actually take a call. And again, today's volumes, as you can very clearly see, 4.7 lakhs or 4.7 million. 10-day average volume is 7 million almost. So again, going up a little bit on low volumes may not actually be at all a good idea to buy. Dr. Reddy's. So again, daily chart, Dr. Reddy's, just like Cipla, very weak candle, sort of a doji, and very low volume. Having said that, tentative crossover of MACD, so it could find some strength. But if there is anything to be talking about Dr. Reddy, then it's only buying above 3,300. And interestingly, just watch this level. You have that to watch out for. So that's the resistance line. Right, so that was the flag which broke down, but the target has not been met, and until and unless it goes below above 3250 on good volumes, I would think Dr. Reddy's is a short. The short will become more convincing once the 3100 or 3140 level gets broken down on higher volumes. Gale, again very range bound, right? Hasn't really done anything. It's a buy above 460 and a sell below 430. Very strong support at this point at low levels, and if the market continues to rise, this could potentially be a buy. Gold, wow, nice big red candle on gold today, but again very poor volumes. So this is actually interesting, because in spite of the rupee depreciating, or rather, yeah, against the dollar, and gold generally indexed in dollar terms, one could have expected that the gold would become in Indian rupees more expensive, but actually it gapped up open and then has been swiftly sold off. So I don't have the dollar gold chart with me, but if dollar gold has become weaker, then really interesting to know what else could happen. And then of course you have this big support line at 2,396, just about 50-60 rupees lower than this level, and if that breaks down, then gold could easily fall to 2,200.
But actually, Sriram, the Chennai guy, in his thing, he has put that gold may go up to 3,000.
Okay.
I don't know.
On technicals?
Yeah.
Okay.
Yeah, he likes to
okay. Okay. So there's somebody else, his name is Sriram, that we know. He's in Chennai, and he has a different view, which is that gold could go to 3,000. I'm not sure what his basis is, but at least my reading of the charts here. So this is the weekly, and here's the important thing just to keep in mind. So this is the weekly chart of gold Bs, and you have sort of a double rounding top here. So this is one big rounding top, and then another rounding top, and you have a very clear neckline, a double sort of top neckline here, and it could technically go all the way up till even 2,600 on gold, so that's another 150 rupees up, and then maybe take resistance there and then come down. So I wouldn't really be in a hurry to buy gold or short gold at this point given this long term, and I just sit and watch, and if that level comes, which is around 2,600, and then moves down, then that will be a good time to short it. Otherwise, wait for it to go below 2,400 and then short gold. But of course, the better thing to do is actually get the dollar chart of gold and see how that is doing. By the way, talking about the dollar chart, I mean, maybe let's do one thing. As the dollar gets stronger, gold could become weaker, right? So that's a well-known correlation. As the dollar currency becomes stronger, then gold itself becomes weaker in dollar terms. Let's get gold. I'm just trying to get the gold chart, 1 second. Alright, so here is gold in dollars. This is from investing.com, and over the last 5 days, this is the 5 minutes, sorry, not 1 week. Alright, so this is the last 1 week chart of gold, and you can really see that it's probably trending down. Can I put lines here? Or let me put candlesticks. Right, so there you have it. This is a 1 week chart of gold intraday at investing.com, and you can see that it's definitely showing some weakness, and you have a clear downtrend line which is there, and once gold goes below 1150, then there could be much stronger selling that happens. While I'm doing this, let me see if I can get another chart of US dollar index. Here's the dollar index. Yeah, DX. Oh, there's a Bitcoin US dollar now. Wow, I didn't see that the first time. Hey, by the way, there's a Bitcoin group in Bangalore. Huh? They meet, I think, once a month. For those of you interested. All right, so you can see the dollar clearly going up. Let's put that 1 week. Yep, this is really good strength, and you're getting good volumes too. All right, so looks like the dollar is back in favor across the. Oh wow, this is very significant. Double top exactly made sometime in 2006. We are back there, and by the looks of it, the way it has gone up on very good volumes now, the dollar is set to all go up. So guys, Those of you who have rupees, please go to Commercial Street tomorrow, convert them to dollars, and sit. And then you might. BIC fellows are all rich fellows now. Okay. And those of you who are in the export business, then you should, bill as later as possible, and then get your dollars in as late as possible. You'll probably get a hell of a lot more rupees. And if you're in the import business, then send out your next 3 months orders now, tomorrow morning, go up. Because if dollar breaks beyond this double top, which is, by the way, extremely significant because it's from 2006, we're talking about seeing this level again after what? How many years? 8 years. So we're getting dollar back to its 8-year high, and if it breaks this, then I think a lot of currencies are in trouble across the world, and of course the Indian rupee too. Which brings up a very interesting point. Our RBI governor, for all the bashing he gets from the government for not decreasing interest rates and from the all the commerce bodies and all, I think he's on to something, given this dollar thing. If the dollar goes up and the rupee depreciates, our balance sheet is just going to go for a toss, and God bless us with more or rather higher prices of crude oil. In spite of dollar crude going down, our Indian rupee crude could actually now spike. All right. So I think very interesting times, very different session therefore today. It's been interesting. Last 1 month we've had really, really interesting sessions on IMR. And this is definitely an outstanding find in today's session, and I think this could be the theme across the world for the next many, I don't know, weeks and months. If dollar keeps strengthening and the US economy is expected to strengthen, and the Chinese economy is weakening, the Japanese economy is going into recession, then there's only one place in the world now which is actually now still strong, and that is the US, and now everybody's going to run to the US, right? So what is this? Somebody Balki sent us a link on Economic Times, something about why the dollar is no longer key measure of risk aversion. All right. So let's just see. What should work? No, I'll put it on the other one. Yeah. There's one there also. Okay, so what does this say? Inverse correlation between the index and the Nifty correlation. Okay, this is about the Nifty versus the dollar. Okay, I am talking about something different. This is to do with the Nifty versus the dollar, and what they're saying is if the dollar becomes stronger, then one sec. Just give me 1 second. Right, okay, so this is about the dollar versus the Nifty, and what I'm talking about is the US dollar index globally, and a lot of people are now going to buy the dollar even more globally, and that would definitely mean that they could in the future be actually less money coming into India in terms of dollar returns. So FII inflows, it's something that is just going to be interesting to watch. That's all I'm saying, right? And this link is with respect to Nifty and dollar. I'm talking about the US dollar across the world and how that might just impact the markets. So I don't know, here's a thought. All right, maybe it's really high time that all of us really got down to opening our international trading accounts and put our money in US dollar denominated equities in the US, right? Because I don't know, given what I'm seeing, if just the dollar keeps going up and those equities don't do well, you'll at least get advantage of the stronger dollar against the rupee. So when you bring it back in, and if the Indian markets and the global markets for that matter, not just the Indian markets, all the emerging markets take a hit on this, then there could be some really, really interesting times this year as far as how the Indian Nifty behaves, or for that matter, all the emerging market Nifty behaves, emerging market equity indices behave. Keep a track on this. I'm going to track this every day now. the US dollar index and see how that moves. And I can promise you, once this is below 90, above 92 or whatever this high is here, let me see, candles. Okay, so this high is, what the hell, is it showing high already? Oh, where's one monthly? Where did that 2006 disappear? Yeah, okay, you can't use this. This is in 2010, this is in 2006. Okay, whatever it is, let's not spend too much time here, but this is definitely something to watch. If what I'm saying is, if it goes above whatever the high point of this is, which is sometime in November of 2005, let's just to be safe, just put that at about 92. If the dollar index goes above 92, which I think it will, then India is in for tough times, right? Okay. So with that brings us to a very interesting point, which is all export companies or dollar generating companies. So again, back to our IT companies, if they are not, see, they all hedge their inflows, but some of it is not hedged. So they'll have this portion of their revenues which is unhedged, and that could just give them a kicker in the next few weeks and months on the treasury profits, and you might just see a good EPS growth only simply because they're just holding on to naked dollars which they have not hedged. Okay, and so again, okay, the reason we saw this is because we were talking first about gold and then the inverse relationship between dollar, gold and US dollar index. So if the US dollar goes down, if the US dollar goes up, then gold dollar will go down, and then the question is, where does the Indian rupee go? Will the Indian rupee depreciate to the same extent as the dollar depreciates? The gold falls? I don't think so. So even in Indian rupee terms, we could hang on to this price around here for some time, given that the Indian rupee could depreciate, but it will be interesting to see if the US dollar really shoots up and gold really goes down. And I don't think the Indian rupee depreciating is really going to give us any help on the rupee value of our gold holdings. So those of you who have large gold physically, you might want to get ready to liquidate some and start negotiations at home with the Home Minister. Right? I don't know how you do that, but just sticking my neck out and saying, I can afford to say that since
there was on Twitter, this guy, there's one value investor and question for foreign various. I don't know how many of you follow him or heard of it.
Okay.
So he has written that like nobody has become rich in this world by buying gold.
Okay, fair enough. I tend to agree. Okay, so this is really interesting. I think we should put this here. US dollar index at 7-year highs, may break 2006 D top. Then what? For commodities and for equities. By the way, commodities will probably become cheaper then. All right. So dollar currency becomes more valuable. Commodities go down, and input costs come down. So it's going to be an extremely interesting and a mixed bag, I think, given what we have just discovered. So do commodity prices go down further in the months and quarters ahead because the dollar is going up? Do commodity prices go down even more simply because of things like cool off in China's growth rate? And talking about China's growth rate. So Chinese growth rate is set arbitrarily every year, and this year they want 7.5%. There's really no logic to it, right? So there are now talks and calls in some serious media saying that the Chinese government should do away with these growth rates, because otherwise they're going to just get into a jam of a very embarrassing situation where they may not achieve the growth rate. Then how does the market react? And two, trying to then pump in money just in order to meet this so-called arbitrary growth rate. So just do away with it and let the economy do what it wants to do. So if with China cooling off, with the US dollar going up and the commodity prices coming down even further, then this will be really interesting times. Then input costs, your steel, your copper, your crude oil, etc., could be much lower than where they are in the next few weeks, months, quarters, and then we'll have interesting times ahead to see how this pans out. This is really interesting. There's a macro story developing here. Don't know how it will play out, right? So I don't know if you're going to make money, but I'm definitely sure we're going to come up with a lot of stories. Okay, so back to stocks. We're looking now at Grasim. And again, so one more stock which has broken the downtrend very clearly upside. Today's very big Marubozu, but again very poor volumes, right? So this is not looking good at all. So I'm wondering, where did this buying happen? Who bought and why did they buy? And these are not small candles that we are seeing. We're seeing pretty big candles and no volume in them. HCL Tech, so just went up back to an important resistance of 1615 and no volume, right? So okay, so which IT stock took the IT index up? That we'll have to see. So HCL Tech, red candle, no volume, right? So let's extend that and just leave it there. So almost exactly there at the downtrend. It'll be interesting to see how this pans out. So by the way, if this is a good sort of if it does come down from there, then you have a nice descending triangle. If it breaks 1450, then much lower levels could happen for HCL Tech. HDFC, wow, look at this. What candles? This is just massive. Yeah, what's the open? 1127, close at 1171, so 50 rupees. That's almost 4% up in a day. And okay, small pickup in volumes for sure, but it's not, I wouldn't say this volume pickup is commensurate with the sort of price move that happened. So fine, volume is there and it's back to its life high. I would definitely not be shorting any of these financials, including HDFC, though it's not a bank, simply because if interest rates do get cut, then these are companies which will definitely benefit. Having said that, I need to go back to, I keep getting distracted, I'm sorry. What I was talking about, the RBI governors, is he onto something in observing the US dollar index? Is he expecting a rupee fall? And is he therefore holding on to maybe volatility in the currency markets to come, and therefore he has not actually yet decreased interest rates? And had he decreased interest rates and now he was to like sort of be in a bind, he would look very stupid. But now he's probably maybe 2 months down the line going to look like the smartest guy in India, having not decreased interest rates so far and saying, look, we are protecting the economy because we've got currency volatility, rupee goes to 65, and what the hell do we do to protect our forex reserves and all that stuff. So let's see.
And today actually all housing finance companies have come up. 2-3 stocks have made like GIT.
Quite a few, yeah. So we've been tracking a few.
New flavor of the housing finance.
Possible. So HDFC Bank, again, life high on a closing basis. And again, okay, so volume a little bit, but again, not substantially higher. So nice big Marubozu candles, but not really compelling volumes in them. Having said that, again, like I said, all banks should continue to be bought. The next logical resistance for HDFC Bank will be 1,000 bucks. So we'll just put a line there to watch out in the future. Then we have Hero Motors. Hero Motors just gone through that apex, really undecided where it wants to go, and we'll have to wait and watch as to see how Hero Motors pans out. It's a wait and watch, do nothing. But if we have any indication from Bajaj Auto, etc., it might perhaps go down, right? Okay, but at the very least, no fresh positions on Hero Motors. And if you have any longs, definitely get out if it goes below 3,000. Hindalco, so metals have done well for this whole week. Nice move, but no volumes. So metal index actually was showing some nice green candles for the whole week, but this is not backed by volumes at all, and this is definitely not good news as far as metal stocks are concerned. Of course, excellent support on Hindalco at 150, and we've been talking about the negative divergence of the metal index itself. So simply on basis of technicals, if you're looking at a multi-week, multi-month sort of thing, this may be something you could still buy, but the lack of volumes is a concern. Now let's go back to the macro picture. If commodity prices are going to come down and then it crosses, say, an oversupply, a glut with demand coming down because of Chinese growth coming down, then margins will get squeezed, and then we might not see these stocks actually perform so well. So this is interesting because technically we are actually looking at buying opportunities, but fundamentally things are possibly changing, and then we may not be able to actually resolve this sort of fundamental saying something and technical saying something. Therefore, the situation is very simple. If you're a trader, go with the charts and keep strict stop losses on a long, on metals and even Hindalco. But if you are looking at holding metal stocks over the next 3 to 6 months, then I think you may want to start to review that view and look at lightening up on your demat metal holdings over time. Moving on, Hindustan Unilever, again, absolutely no strength at all. It has not moved with the market. You're seeing it sort of, I think, the fact that it's not moved up and showing a small negative move today, this minus 2 rupees 50 paisa, is indicative of weakness that is embedded in the FMCG space that we've been speaking about for a few weeks now. And once it's below this level of around 735, then even 700 on Hindustan Unilever should be expected. So HUL, definitely a stock to short as it goes higher. Today the high was 766, it closed at 755, a cool 11 rupees. And there was, you know, if you're doing intraday charts over the last 5 days, you would have seen some resistance here. And as it came closer to 774, then more and more shorting to be done. Right. ICICI Bank, so another big but volume pickup there. But really, again, you know, what I'm talking about is volume is higher than last 2 weeks, but not really substantially higher than the average itself. So high volume to me always means higher than average volume for a sustainable up move. This is not looking like a very you know, what would I say, promising move. Having said that, there is one thing about ICICI Bank. It's been a laggard in the whole banking space, and this broke out of its 2007 peak only now, whereas many of the other stocks did, sorry, 2008 peak only now in this year, but many of the other banks have moved up, and it's underperformed very, very badly compared to the other banks. So I would, again, by virtue of it being a bank, I would not be selling or shorting these, but at some point, if a correction comes, then you know you'd want to buy it. And also because it is a laggard, and there are two ways of arguing that. One is it has to play a catch-up game, and therefore you want to maybe keep holding on to it. But the fact that technically it broke a 6-year double top, I think there's a lot of strength that could be left in how much higher this could move. IDFC, well, moving up, weekly chart, sorry, make it daily. Okay, so that's where we are. Again, there's the volume. Okay, so this has clearly picked up volume, but not so much on the price side, and the MACD has moved up. The IDFC story, I think, for me doesn't change. For the rest of the year, it is keep buying the stock till the IDFC Bank gets spun off from this. Remember, you will get those shares once that demerger happens, so just keep buying that. But it'll be interesting to see that IDFC Bank might just get formed when you have some pretty big economic turmoils happening across the world, including in India then. IndusInd Bank, it's been on a tear for the whole of this year and has made a new life high today. Oh, this is interesting. It made a doji today. You saw really good, strong Marubozu type candles in all the other banks, but this one, which has been a pretty strong one for almost the whole of this year, almost 2012 or 2014 rather, is actually now showing a Marubozu. Well, that's interesting. Not saying that the up move has stopped by any means, but just an interesting observation. And volumes below average, just like in many other places. Infi, okay, so this is why the Infi, sorry, the CNX IT index went up. Infi is a big weight in that, but again, let's look at that volume. 1.6 million, and the average is 2.2 million. So yes, Nifty moved up, took the IT index up with it, but the volumes are not there. This is definitely not looking good. ITC, weak, no strength, consolidating, getting tighter and tighter and tighter in that consolidation. Some pickup in volume over the last 2 weeks, and it'll be interesting to see what it does with this support line. Looks like it's going to break down, and once ITC is below 365, you can definitely short it for 355. At least 10 rupees good short is there on ITC. Right. Jindal Steel, nice up move. We talked about this double bottom, I think almost 2 weeks back, and we said potentially a place to buy, and it's come back to that resistance zone, and the volume has picked up. So some stocks are showing some volume, others are not. Jindal Steel is definitely an exception. This thing, in terms of, it came back to almost its 2008 lows, and part of it is the political connection. So Sergeant Jindal, no Congress eye in the center. Second is the Colgate scam that happened, and I think these guys were caught in that, and could be at fundamentally attractive valuations. I don't know, but this has not gone up on low volume. This has actually gone up on high volume. So Jindal is something I would probably say buy, and let me put it that. All right. So all the buys have been associated with good volumes. 1 second. So Jindal Steel buy once it's above 170, 190, 200 are definitely good possibilities, right? Even 210 perhaps, right? Yeah. Then Kotak Bank. Okay, so going sideways, not much in volume. There's some news about the ING Vaishya trade unions being unhappy. I don't know why, but yeah. But ING Vaishya was not working, or more lazy than Kotak, whatever. Right. So Kotak Bank there, and wouldn't read too much into it. Looks like a consolidation pattern right now. It has to go back to 1300. So just because it's a bank, and it's definitely been one of the much better banks. What a chart in the last 2-3 years. So it was just 600 rupees in 2013, and now it is 1270, or more than double. L&T, I don't know if the submarine deal is heating up. More and more news. There's some news about BHEL having a consortium formed with 2 other Indian companies. One is a shipbuilding company, to bid for the 6 submarines that the government wants to build in India, Indian design, Indian manufactured, etc. So anyhow, that's background news. L&T gone up, good support at 1500, 1475 levels, and volumes have picked up on L&T. So that is something else to track. So I would put L&T here in the buy list. Lupin, no strength, weekly chart however. Just there, showing this marginal move like our Dr. Reddy's and Cipla earlier, and really no volumes either. So leave that. If it does go back to 1500, it might actually be a shorting opportunity at 1500 rather than a buying opportunity. And M&M, oh, okay. So we talked about some weakness in auto. M&M coming down to its support line here at around 1220. 1200 is the 200-day moving average, and if that breaks, then poof, we are down to at least 1177, and then after that to perhaps even 1100. So you've got a nice rectangle here with a measuring implication of about 150 bucks. So given 1225, we are talking about what, 10, 11, 25. Yeah, so I think 1100 could be a potential target should this rectangle get broken down. And so you're seeing a sort of consolidation type pattern, which is what rectangle should have, and the question is, does a breakdown happen or not? Those of us who want to take a low risk approach to this might consider wanting to buy a 1200 put on M&M for the whole of this month, or at least till the results are out. Maruti, okay, so just edging there, but unable to break that 3400 level, or hasn't even come there. Out of doji like formations, it's wait and watch. It's a short below 3250 and a long only above 3450. Having said all that, just keep in mind all the other macro pictures which are developing around us. And I think somebody said last week about Maruti having some 4,000 or 5,000, 6,000 or something as a price target by some research house, given expected sales and all. But right now this is not the time to buy. As a matter of fact, if you are holding Maruti, you might want to think about getting out of it if the 3200 level breaks down. NMDC, okay, so again really no volume. So this whole up move from about 140 to 150 happened on low volumes, not a good picture at all. And if it does go to, let's say, around 155, 156, 157, it may be a good place to short the stock. NSE VIX, we'll skip that. NTPC, this keeps coming. Okay, so NTPC back to a very important resistance at 144, 145, and low volumes, so not good. Actually, I hope somebody kept a count of how many stocks have gone up on low volumes. ONGC, we finished looking at that, again went up on low volumes. Both remember ONGC and Kane, if crude oil falls, then we are like gone. Talking about crude oil, let's get the crude oil chart here. Okay, there should be some crude oil chart here. Okay, just CL, not bad. $52, 1% down today. Let's look at the 1 month chart. Not looking good. Wow, this is really bad. Right, so big red candles. What is this? 100. 2011. Oh, this is monthly candles. Okay, 1 second. Okay, weekly candles. Okay, so you're seeing weekly how crude oil has been falling for the last since July, and it broke below 100, and the last 6 months it's just been going down, and the volumes have actually been picking up. Let's look at daily charts. Alright, so some support at 52 tentatively for now, but the downtrend is pretty strong on this, and yeah, I think at least 50 as a psychological mark should come on crude oil. 5-hour charts. Okay, this is not looking good. So some support at 52, long lower shadow, but this is now a 5-hour chart. Remember that. And 54, 54, 50, good resistance. 55, lots of resistance. And once it's below 52, then 50 could be coming. There's only one thing about. Well, actually, I was going to talk about the weather, but the deepest winter is probably now over, and things will get a little bit warmer from going on since we're now into Jan. So the demand for crude for heating in the US, in Europe and all is gradually going to taper off, whether it's gas or crude and all that. So demand drop is natural and seasonal now, and there might be another reason why crude could perhaps drop, right? Okay. So what I was saying is both Kane India and ONGC are, I probably have much lower levels to go to if crude goes down. So Punjab National Bank, so it did a split, right? So quite far away. 275 is the life high. It's at 220 right now, and after breaking out of the 200, not the 200, sorry, yeah, the 200 breakout zone, and that it did on good volumes. It's actually not been able to sustain at higher levels and is now cooling off. Again, because it's a bank, I'm not saying you should sell it, but given the sort of weakness that this might be showing, if something happened on the banking side, maybe, just maybe, I'm saying this could perhaps be a PSU bank to consider shorting later technically if it goes down to 215, right? So it's mostly the private sector banks that have shown tremendous marubozus this week, today, and the PSU banks have really lagged. So power grid, okay, no comments, going sideways. I would stay away from it for now. Reliance Industries, well, definitely did not participate in today's up move. All right. Again, poor volumes. 900 could actually be a good place to short the uh, stock if it goes to 900, and all the way past target is 868, and after that 850, and a really good stop loss for the short would be at around 912, 913. Nifty, actually we didn't give a call on the Nifty, so let's do that. So this breakout is clearly happening on really bad volumes and taken up so far at least by the private sector banks and maybe to some extent by some of the metal stocks in the last 1 week. And today's move has almost exclusively been on the private sector banks, looks like, right? But again, none of them have really good volumes, at least the charts that we've seen so far. So technically we are right now exactly at 8,390. Next levels on the upside would be 8,470 and then 8,540, and then it will really be crucial to see if it goes to 8,600. Any long trades I would have, I would maybe be quick to book profits at the slightest sign of weakness in the market, and have some really strong stop losses, because the rally is not really looking like it's on a sound footing. State Bank of India, again, not much of a move today and no volumes, right? Okay. SSLT, so gone up, but again no volumes, so iron ore and all, but you can clearly see the poor volumes here in this chart. It is clearly there. So the move from 205 to 220, almost a 10% move, is happening on clearly low volumes. Sun Pharma, okay, really no strength, is going sideways. Consolidation, very tight consolidation happening. 850 will be a resistance, and if it breaks below this neckline at around 785, 784, then 750 should be expected. Tata Motors, big move and slight pickup in volume. So don't know on what account that is. You didn't see sales are good for Tata Motors, probably on account of their Amaze, not Amaze, what is that? Not Bolt, there's another vehicle that they launched which is actually doing very well. You could see quite a few of them on the roads also. And I don't know if there's something cooking. Again, by the way, Tata Motors is like a foreign exchange proxy, JLR. So the JLR profits now being more valuable in rupee terms. Maybe there's a story that is developing there. Okay, so Tata Motors looking good, but none of the other auto stocks were looking healthy at all. Could be a buy at around 505, which comes down a little bit. First target 535, then 540. Tata Power, okay, so nice strength today and slight pickup in volume, though again nothing exceptional. So maybe some potential to buy, but would be wary and not put too much money into these stocks right now, right? If you're buying these power stocks, you're playing the sort of the underdog game. And just to reiterate what we said in the last few weeks, this multi-year downtrend line from 2011 has been tested as a good support twice in the last 6 months and again in the last 1 month, and that's potentially a place from where stocks can build some long-term rallies. And this time this rally could be for a year, 2 years, who knows. And the power sector, there are two things to watch out for. One is the coal allotment. I think sometime end of Jan, mid-Feb, that auction is supposed to happen, if I have my facts right. And the second thing could be potential drop in interest rates by even 0.25%. Then that makes the interest burden quite less. Right? So I wouldn't look at shorting power, but would tentatively maybe start looking at buying it. So Tata Steel has gone up, toyed around with that 400 mark for 1, 2, 3 weeks, and now seems to be going up. But let's look at volumes. Volumes slight pickup, but I would wait for more evidence. So a lot of the stocks which I've done, by the way, MACD positive crossovers, and we're looking hopefully at that. Do remember that a lot of those crossovers happen in the negative zone, so that's something that you want to keep in mind. So 400 and plenty of resistances all the way to 450. So we'll have to really wait and watch and see what happens to Tata Steel. But having said that, for short-term traders, there's some really good support now at I would say around 390 levels. And if you want to go along, you could use 390, 380, and below that as a decent stop loss, or go with the 400 call option and see and limit your downside. For now, 425 is the first immediate resistance to watch out for. TCS, all right, so that's gone up, and volumes are just not there in this either. This whole up move from this price of 2,350 to the current price of 2,570, almost 200 rupees, has been on declining volume. Not good at all. So if it goes to around 2,600, 2,650, you might want to think about shorting it at that point. So we'll just keep that and watch that level. Tech Mahindra gone sideways, really no contribution. So the IT index went up because of TCS and because of Infi, and in both cases the volume is really not there. Tech Mahindra going sideways, and HCL Tech was actually red today. Ultratech we finished. Wipro gone up, broken through some resistance zones, stopped just there at the double resistance at around 560, and today also no volume. All right, so small volume, but really nothing convincing. So Wipro is there, and I think last one for Nifty we have the Z stock, Z Tele, and that's coming back to its life high or close to its life high outside the 2000.com boom level, and if you discount that, it's at a life high and doing 390, and it's potentially, I would say, a buy. Once 390 breaks out, then surely I think 400 and higher levels are possible from a trading perspective, but this could take some time. It's been consolidating for a full 2 months now, and once 400 goes, then definitely higher levels are in the making. Just sticking my neck out, you might want to do a vertical bullish spread with this. Buy the 390 call and sell the 400 call for this month. Again, things with your what is that, events, please remember that is something that you really want to track. So here's the other stuff. All other stocks that have gone up have done so on low volumes, and some of this declining volumes has been there. for 2 weeks. Not a good sign. Question is a bull trap being set up? Alright, today's market went up almost exclusively on private banks and some metal stocks. Right, FMCG and pharma continue to be weak. Should we look at? I would say, sticking my neck out. I should put this out clearly. Short at higher levels. Consider what? Selling longs or demat holdings as the Nifty approaches 8600. Right, so that's the thing. Bank Nifty is possibly the only thing, but I think that you could be long on. But like I said, I think the real issues are now with the US dollar at 7-year highs and how it really, does that. What's the consequence of that? And that'll could happen next week, next month. I think you should watch that and make all these URLs that you visit every day, bookmark them. So your dollar index, then your crude oil price, and gold in dollars, and that will give you a really good idea. Let me see if there is MC Morgan Stanley indices. Something was that? Okay, one sec. iShares MSCI Emerging Markets ETF. S&P ASX. Okay, I'm not too well versed in this, so I haven't seen them. But there's an index here, HFRX Emerging Markets Composite. It's a global index. And who is this guy? I don't know. Let's see. Who is HFRX? No idea. So if we look at the HFRX, it's gone down from 2050 on a weekly basis from September 2014 to 1900. And right, clearly one rounding top, double top here. And let me just put this in Google and let's find out what HFRX is. Hedge fund research. Okay. So HFR is hedge fund research. So they have a global index, and what does it cover? There's so many other. Where is that? No, I just want to know what it's tracking. Emerging. Okay, brick index, regional, monthly. There's no details about this. Okay, one thing is that to note, all these are in dollar terms, so that really makes sense that the indices are actually coming down, because in rupee terms we might have gone up, but in dollar terms, because the dollar has become stronger, it's not really doing too well. So you've got to remember one thing: institutional money will be looking at stuff like this. Institutional money is generally in dollars, and when they see the dollar index not behaving well, the rupee index could do well, but the dollar index is not doing well, they're going to reevaluate where they want their money to be. And very clearly the HFRX emerging market composite index is not showing any strength at all in the chart, and if it goes below this 1888, then definitely a breakdown and easily a level to 1690. That's almost more than a 10% fall in dollar terms, right? Okay, so I think that's it. Really interesting session. If you have any questions or any stocks that you want to review, put them out now, and we'll look at some more charts if you have. You have anything? Bolo. God. Okay. Yes, I have everything. All the Indian stocks. Yeah, why is it taking so long? Yeah. Okay, so V-Guard, Sridhar's request, some massive volume happened, some block deal, bulk deal, something.
Some fund buckets, some international.
Okay, so some international fund bought a big chunk of V-Guard sometime.
December.
Yeah, this was 24th, one day before Christmas or 2 days before Christmas. So V-Guard is at a life high and continues to be an actually good rally. All right, and okay, what is interesting about V-Guard at this point is that at these levels there seems to be a lot more volatility building up in the stock than has been there for a long time. Why do I say that? So if you look at it for, let's say, from March this year, where it's gone from 400 to 1100, wow, pretty hell, you made a lot of money, man. 300% in less than a year. Congratulations. Okay, so here's something that we may want to note about V-Guard going forward. So first of all, the volume picture is all completely messed up because of this block deal or bulk trade that happened, so I can't read the volume anymore. The thing to watch is this: why is this sort of volatility happening? It's been sold off, and it went from an open of 1010 to a low of 915. That's almost 10%. Intraday drop, and then again an intraday recovery of 10%. And just yesterday, it opened at 1175. It went to a low of 972. That's, wow, how much? 130 bucks, 200 bucks. That's almost 15-20% intraday, and then again it's been bought back up. There's been some big selling here, not big as in whatever, there's been some serious selling there, and of course it was bought by people who probably, I'm just theorizing here, who probably missed out on the rest of the move, were looking at it and said great opportunity to buy, and possibly the same thing happened here, right? And this has not happened, like I'm saying, for the last several months, and it's happened before. So here we've got this whole of 2013 where it sort of went sideways, and then, okay, let me make it weekly. Right, so you 2013, 2012, 2013, wait, 2013, 2014, a lot of sideways move and some volatility, and then now a nice trend for the whole of this year, or rather last year. But again, and even on the weekly chart, this is a little bit of a concern. On a weekly chart, you get stuff like this, then you know something is cooking. That's you could, if you discounted this volume, because that happened on that bulk deal, then this would be pretty high volume. right? And that high volume was this whole drama that week. But again, this week has been pretty good. Again, you've got good volumes on the buying side, and it's actually made a nice, pretty healthy candle. So one could say this was just one month of, sort of wait, watch, review. Maybe some people waking up to it. Some people definitely selling out and booking their profits, well deserved, and others re-entering or entering it fresh with a view that there's a lot more potential. But again, just to pointing out the volatility both this week, mid-December, and this week, middle of December, and this week also. So there is quite a bit happening, and within one day you're seeing 15% moves. That's quite significant. So I would, technically speaking, I would definitely look at this level as a sell point, and that's at around 930, below 930, or one wants something a little more than below 832, but that's quite a big knock from where it is right now. So there's some, this is a sort of support zone between 850, 950, and yeah, so then we decide. Maybe if I was purely technical on this, then maybe it's time to sort of start looking at lightening up the portfolio, in my opinion, right? That's it. So that's the view on VGuard, and I'm saying this only because of these two candles, and that's ringing bells at this point, right? Though there's still long-term strength is very much there. Intraday breakdowns have happened, but it's not closed below that. So, and then 1000 is the psychological number that the stock becomes 4 digits, and people need to sort of get used to it. So it went to 1100, came back to 1000, typical behavior in terms of retesting that and seeing support is there and then moving back up. So that's on VGuard. Anything else? Yeah, sure. Okay, Surya wants Berger Paints. So Asian Paints doing well, Berger Paints also doing very, very well. Yeah, Sridhar makes, wow, what a move. This is fantastic. I don't know when we looked at Berger Paints last, but we did look at it sometime. Yeah, I don't know when, in June, July. That's why this green line is there. And at that time it was 300 rupees, now it is 450 rupees. What a fantastic move. And today, wow, brilliant move and on brilliant volume. So again, this is bulk deals, block deals. Happened on the 1st of December, and there's another one that happened today. Sridhar makes a very good point. Paint companies, a lot of their raw material is like crude stuff, and crude going down is a game changer for them. At least the weight has gone down 50%, and I'm sure the paint costs have not come down even 2% in the last 6 months, right? So they're just keeping the money for themselves. Typical of consumer products, by the way. Consumers don't know enough, are not smart enough, or if they are smart enough, not united enough. So the companies will just maintain high prices and eat the extra profit, and that's what the government is also now doing with not reducing petrol prices at all. So Berger Paints, technically everything is a buy, but that buy is basically hinged upon these sort of corporate actions, or rather corporate large institutional or whatever buying that's happening, and you must be prepared for sharp cool-offs also. So you saw that happening here. This was a big buy, went to 440, came back to 380, and then has now again gone back. So don't be surprised that some level of cool-off happens in this stock. It's very tough to read this. Tomorrow it could be at 480, 500, but inevitably, I'll tell you one thing, that even if it goes to 500, 550, there will be at some point a reaction back to around 440, 400, at which point it probably is technically a better time to buy the stock. So if you're buying it tomorrow after, what are you saying, a 15% move today, you're definitely taking on some risk, right? Or more than average risk. So that is Berger. Sridhar wants to look at some housing finance companies. So GIC is something we've been looking at in the mentorship program, and it was also brought up last week. And this is what it has done: 185 to 240, all on good volumes. It's just been some massive volume that has been happening in.
actually, if you see that Monish Pabrai interview, he is one of his holdings also. And there are a lot of rumors in the market that Ali Khanna has entered.
Oh, okay.
And now Ali Khanna is like
the next person to watch.
Whatever, I mean, like
she buys, everybody wants to buy. Yeah, sure. Okay. So, well, whatever it is, I mean, technically, definitely a buy. There is absolutely no doubt about that. You have, yeah, and you haven't seen volumes like this for since when? Since almost 2013.
2010.
Yeah, even though there was some volume here, but this sort of high volume now not since 2013. So definitely a buy. There's technically absolutely no question about it. Even this, if there was a sort of measuring implication here, that's been met. My thing is, you get sharp moves like that, 180 to 240 in a straight line. This has happened in how many days? 1, 2, 3, 4, 5 days. It has gone up 30%, 30-35%. You know, I generally expect when stocks move like this, a correction happens. And from a risk perspective, I would buy into the correction rather than buy right now. It's simple as that. So it would be definitely be on top of the buy list, but wait for the correction and then enter. Right? Yeah. Then there's got some Refco Finance. Repco. That had a Repco Home. Yeah. Repco Home. So maybe it's all the same industry. Yeah. So that, so you know, Gulf Oil. Right, we'll look at that. So Repco again at life highs, and volumes have definitely picked up. Right, so there is this big volume here which is messing up the volume chart, but you can see here the volumes are clearly picked up. And then the other big one in housing finance is of course HDFC that we saw, but LIC. So LIC housing finance, another life high, again nice fantastic volumes today. This could just be, you know, a sectoral move. Pabrai talked about it. It's gone viral, I think, that interview all over the media and websites. And so everybody's just buying housing finance stocks. Who knows? I don't. It's speculation. But that is exactly what happens. And the elephants move, then, you know, everybody just wants to follow them. So these are housing finance stocks. Even before Pabrai came, we've been tracking them in the mentorship program, and they have been strong buys. And you know, we all like to find reasons whether they're valid or not. God only knows. And the theme basically being that with the possible interest rate cut, housing finance becomes cheaper in next month, next quarter. But again, today I'm hedging that statement. I was very bullish about interest rate cuts till today, and the reason I'm hedging that statement today is the way I see the US dollar and the repercussions that it could have worldwide. And if the rupee falls, then the RBI governor is not going to want to cut rates in a hurry. So, you know, we've seen what happened to Russia. Of course, we are not in the same league. We have much better economy, much better foreign exchange reserves, and probably much better management of the economy itself. But don't rule out some dramatic moves. Okay. There was some link on Gulf Oil. So, what did you want to discuss, Bobby, on Gulf Oil? Was there anything specific? What are these?
Gulf Oil lubricants. I just it was one of the. I mean, the lubricant sector. I think India is the second or the third largest. I think, and they have also, these guys also have a benefit from the crude oil price.
Okay. Okay. Yeah. So what Bobby was saying is that crude oil. I mean, this is basically crude oil is their, I think 80-90% raw material. Right, so they make lubricants. So that matter of Castrol also. Yeah, all the lubricant companies, Castrol, Gulf Oil. I don't know which are the others ones which are listed, if any. Actually, come to think of it, it's a fantastic theme to pursue. I don't know where we can get this data as to list companies according to their input. You know, rank them according to their raw materials, and then look at the ones which are right. So if you know which companies are crude oil heavily, that's their main input thing.
Get an annual report, but
Yeah, but we want a whole list of companies.
Yeah.
We want to, yeah, exactly. We want to automate. If you got the top 10 companies and you just made it a blind investment for the next, I think, 6 months, we could really, get a handsome deal out of that. So again, I know sometimes we learn these lessons pretty late. 6 months back, or not, we've been talking in DIC about tracking commodities, but we've not been able to get a handle on the data. But if you did commodity charting along with technical equity charting, you would have seen the break of crude oil 6 months back, and then the theme would have automatically flowed as to which are the companies which would have benefited from that, which companies should you short, for example, Kane and ONGC, and which company should you go long in, for example, Gulf Oil and Castrol, etc., and things like Berger Paints and all that, right? So these are thematic stories which, as you see, will last for months, not just weeks. And as far as the crude oil thing is concerned, probably the story is not yet over. All right. Great. Any other stocks? Anyone?
Yeah,
Tata Elxsi. Okay, I haven't seen this for a very long time. Wow. Okay, not doing much at all. And almost at the
world. So that's because there's no institutional holding.
Okay.
And ADF even Tata Investment Corp sold at some 200 or something.
Okay. So it went up after they sold?
Yeah. You can well imagine.
Tata Sons. So wow, this is very, very impressive. Something happened in this company. I'm convinced about it. What happened?
I'll tell you what happened. So what is the time frame?
This is sometime end of 2013 and the early
2 years back, Ratan Tata made Ramadurai the chairman of the company.
Of Tata Elxsi?
Yeah.
Okay.
Ramadurai just kicked the asset.
Right. He was before with TCS, right?
Yeah. So when he became 70, he had to leave TCS. Right?
Okay.
So or whatever, when he became 65, he had to leave TCS.
Sure.
So the last 2 years, Ramadurai just resigned because he became 70.
Okay.
So for the last 2 years, he was the chairman of Tata Elxsi. Rumor has it that he used to seek solid assets. Till then, it was a laid-back retired company with 2 punch 1 lunch type of something. So he came in for seeking that.
Cool. Okay, so this is interesting.
And they are doing very well now. So like a lot of the next technology, next gen technology company, and these companies can get crazy valuation and totally underinvested. Except Tata Investment Corp and Tata Sons, there is no institutional investment.
Okay, so I hope you all heard what Sridhar said. Two very, very, very key things. I think one part we probably totally missed out, which is Ramdurai became the chairman of this company and he really kicked ass, and he basically transformed the company. It's been around for a very long time, but been a very, very good underperformer. Let me put it that way, as you can see from the charts, right? All the other IT companies did well, but this is really, really bad laggard. And that looks like a cultural issue on the basis of what Sridhar is saying. And with Ramdurai now coming in, it has... Oh, he's left. Oh, okay, fine. And the charts are very clearly showing this. If one was just tracking volumes and price, you would have picked this up somewhere in December of 2013 at the worst case scenario. Yeah, so it was at around 245 rupees in November 2013. So it's like 1 year. Alright, so Sridhar here bought it on Diwali Day 2013 at around 245 or 250 bucks. Okay, and now it is, you're still holding on to it, I suppose. Yeah, and it's at 600 rupees. Alright, so it says you've seen nothing yet. And the second point he really made is that it's highly underinvested from the institutional perspective, and that's a big kick-ass thing that happens when the institutions get in. So, before they get in, let's put our 2 cents perhaps into this. Of course, technically it's very got really fantastic support at 550, and with the sort of stuff that Sridhar is saying about a fundamental transformation of the company, and it's
actually next gen technology.
Yeah.
So and these companies can get crazy valuation, as we have seen in
sure.
Some of the others.
Yeah. So this could perhaps be right, part of your technology portfolio at least. And from the way Sridhar is saying this, I think 1,000 rupees is just a matter of time. As of now, technically, it's going into a rectangle sort of formation. So with about 150 rupees width or height, and once it breaks out of, let's say, around 650, 800 is the next technical target, and I'm sure 1000 could come. And even if that takes a year, from where it is right now, even 800 rupees comes in a year, you're talking about a 30% return on your investment, and who knows, 1000 could easily come. So great, this is really good. Just want to look it on weekly, long term. Again, just to point out something, if you're doing good technical analysis over a period of time, then this level at around 170, lots of good support zone here, support zone there, double support there, and then it came down to that level and just took off from there, and then so great to be able to add this. For me as a person who likes to know, or rather needs to know why of everything, this thing like change in management and transformation of culture and all really makes a lot of sense, right? And technically it just adds up beautifully. Great. Anything else?
I don't know if you listed only for last 5-6 months, Marico Kaya.
Oh, they went public, is it?
So they demerged it from Marico.
So it's Marico Kaya?
Yeah. M-A-K-E is the
M-A-K-E?
Yeah.
Okay. So this is your Kaya clinics?
Yes.
Right. So
listed in June, July.
So it's gone from 200 to 1000. Yeah. Wow. Okay. So
they listed it at 210.
Okay. It's doing that well?
So,
it's doing that well?
It has something.
Okay.
Not seen anything here.
Okay. So fantastic volumes. Actually went up on circuit. Very interesting.
So every day it was up on circuit.
No, not now. That
From
time.
like 200 to 600 it went up like
Yeah.
this entire thing is circuit.
Okay.
I mean, like more or less give or take 1 or 2.
Right. So the circuit from 200 to 300 went sideways for about 3 weeks, and then from 300 it went to 800, just like that in 3 weeks. And then it went sideways for 2 months, and then it went from 600 to 1100 in 2 months. And again, Sridhar says that we've seen nothing yet. So, okay, really wait and watch. Right. So I had a friend working there as a cosmetologist, dermatologist there. Maybe I should get in touch and find out what's cooking.
I also know from you what brand, that.
Okay.
The general consensus is it is also heavily underinvested stock, and people in the know say that.
Okay.
And results are outstanding. Quarter-on-quarter results are
I'm
outstanding.
going to make a list here. See the Recos.
No. I'm not SEBI registered. Don't put the.
Okay. Stocks. We'll just put it that, right? Yeah. Oh, don't worry. SEBI registered thing and all. I read the research analyst recommendations and regulations. At least till the first 6 months of this, end of January, February, March, April, May, we are safe. Yeah, I know. So we'll create our own media. Don't worry. So Tata, Alexi, Marico, Kaya. So these two stocks are free for you. Anymore after that, you need to get into a gentleman's agreement of yes, full disclosure. Any further less stocks that get named, you will have to give 10% to me and 10% to Sridhar of your profits. Then we'll give you some more. Okay. Anything else? No? Okay. Anything?
It's listed only on BSE. I don't know whether you have started that Singer India.
Singer. Should be that. So we want to look at Singer.
Yeah. Not
swing machines.
Absolutely. MNC, by the way.
Huh.
75%.
Singer round. Okay.
And why I don't know.
Okay.
It has license for retail.
License for?
Retail.
Retail. What will they do retail?
They have their own showroom.
Okay. Wow. What is this? This is one crazy stock. We went from
92 and all.
Whatever 65 to 200 or something, and then did nothing for good donkey's years, in which your money would have just rotted off to hell. Then it does these spikes like from here from 6 rupees. What the hell? 6 rupees to something like 46 rupees.
So the thing from 2009, 10, 12. 2012 is the thing. They came out of the IFR.
Okay, so this must have been BIFR exit, is my assumption.
No, that's all about 2011, 12.
Okay. And then it's gone sideways for 1, 2, 3, 4 years, and then suddenly it goes from 37 rupees to 130 rupees.
Yeah, so like 2012, one quarter they started making profit.
Okay.
Then here they started giving dividends.
So a turnaround stock basically.
Yeah, basically turnaround stock.
Alright, so negative EPS became positive EPS, and you see what happened. It went from 38 bucks to 100 rupees plus. So guys, going back to our fundamental class in EQNS, we keep talking about tracking turnaround stories. So here is a great example of something that actually happened, went from negative EPS to positive
and somewhere
EPS.
Here they gave dividends.
Okay, so somewhere in 2014, so either say they started giving dividends, and yeah, fantastic volumes again. Every up move that you see in the last several years has been associated with substantial volume. There's significant buying interest in this. Having said that, the volume now seems to be a little not so good. So even though there's volume in the beginning of December, it's not.
So basically these are low interest stocks. So
yeah.
Before the quarterly results and after the quarterly results there will be volume in there.
Right. Okay. So you can expect moves once in 3 months, and then you just sit tight on it in between.
Yeah, this is like buy right.
Yeah, right. Don't fool around with doing too much TA on this. And yeah, right. But yeah, I mean, it's got a nice stepwise pattern to it, and well, pull out that results calendar, find out when single results are, and you know what, based on what Sridhar is saying, then you could even just buy this now, and then who knows, 300.
So, this was more like heavily underinvested stock and like sudden interest.
Okay. So one of the themes looks like institutional underinvestment, and this is a well-known thing. When the institutions come, they're not going to buy 100,000 or 10,000 stocks. They're just going to want a big chunk, and then they just hold on to it. Supply of the stock just gets sucked out, and that just drives up the price. Not only at the buy but after the buy. So think about it. So that's another theme that's developing in today's session. Okay, great. Anything else?
Okay, the Wonderla.
They're going to open some more parks in.
Yes, it's a bigger group.
Yeah, Wonderla is going to open some 4 parks or something in Hyderabad.
One in Hyderabad, one in Chennai.
Okay.
That's it for now.
Where is this Wonderla? I don't know why it's not there.
But it's a very long term.
Sure. There are lots of amusement parks required in India, that's for sure.
Parks like get creative and worldwide.
Okay. So Wonderla went from 150 to 330.
So this is the IPO time.
Yeah. And has basically not done much from August after that. Some really good support at 265, 270 zone, or we'll just keep it a little bit there. And volumes wise, it's just very quiet at this point. August, some big volumes happened. Maybe I don't know whether it's results or some announcement or whatever. And then now it's just been consolidating, digesting its gains, and we'll have to see whether it breaks out of 340 now.
A very long term story.
Okay, so 300. Sure. Okay. So yeah, let's put.
No, need not have to.
No?
Guys will buy and like that.
Okay. Okay, so those of you on the online, you have any stocks?
So guys already once said that every Jan 1st you buy railway stocks or budget Feb 28th.
That's all. Okay. Cool. So, okay, if you have nothing, we'll close for the day. Surya, Balki, any stocks? Others have left. They'll probably watch the recording later. I think it was really good if they're not left. Today has been a really, really interesting conversation. So, apart from Sridhar's inputs today, which I'm very grateful for, thank you. There's also stuff about the dollar and the crude oil and gold in dollars. Keep a watch on that, and we'll see how these things pan out. Right? Okay, so the recording should be up by around lunchtime tomorrow, hopefully. I will be sending out the links, and I'll send out this notepad thing also at that time. So thank you very much for your participation, and those of you who are watching the recording, do get back with any feedback, any opinions that you have, and we will take it from there. Right? So see you next week. Have a profitable week ahead, and watch out for the results. That's the big event risk that we are dealing with. And just to sort of wrap it up, the main thing about today, I think, is that the up move has happened clearly on the lower volumes, and you need to be really careful about initiating any fresh longs. As a matter of fact, it might be a good time to look at the market more closely in the next few days, weeks, and perhaps lighten up your demat accounts and perhaps look at shorting at higher levels. Right? Okay, so thank you and good night. Have a good weekend and have a profitable week. Bye.